This is a demonstration of the PPO from Pro Trading Indicators. The PPO is an oscillator combined with a moving average crossover system. So what we've got is the oscillator here in the histogram and then a dual moving average moving above and below the histogram. And after observing this indicator for a while, you can start to pick up on some patterns. The market moves in waves. The market is fractal in nature and has patterns that repeat over and over again. But the difficult decision is, when is that pattern going to repeat again? What's going on at this low here, at this sell-off? How do I know it's going to go down? I don't. It's difficult to determine a lot of that stuff. So what I do is I combine this indicator with just looking at divergence between pricing and the indicator. Right now we're looking at Monster on a 5-minute chart. I'll show you a few different time frames, few different markets. What I did is draw some divergence that I saw in between the PPO and the price, and just kind of talk about ways to trade this. The first one we've got right here is we've got price diverging right here from the indicator, and my PPO is moving down. So I would consider going long here, but my PPO has crossed and gone down. So what I like to do is wait for the PPO to be underneath the histogram and cross up. So let's look at another opportunity here. Here we've got divergence between the price and the oscillator, and the PPO is crossing down. And this follows through for a little bit, but then hits a consolidation and doesn't quite make any moves after that moves against me, basically. This is today on Monster, actually. Here's a good example. Price made a higher high from here. The oscillator made a much lower high. And right after that, the moving averages cross back down. And that's what I look for. This is a beautiful trade. Moving averages are crossing down here. Market sells off, and you can trail stop this any way you like. I like to pivot trail. I'd have a stop here. I'd have a stop there. Then I'd probably be stopped out somewhere around here. Same thing happens later in the day. Price makes a lower low here, and the oscillator makes a higher low down here. See, the oscillator's moving up. Wait for the cross up and go long. Price moves up. So that's Monster on the 5-minute. Why don't we look at the futures market? Here's the Dow forward-looking futures contract, YM, on TradeStation, and this is a tick chart, 400 tick chart. So what do I have over here? I've got some divergence, looking really good, but as I look down at my oscillator, my moving averages are already below. I'm sort of late to the party here, so this for me is not a signal. Up here I've got divergence big time in the buying here. It's just, we've reached a new high, but the oscillator sort of just levels out, or is actually a little bit lower. And right after that, the moving averages cross down, and the market sells off. Next day, I've got a lower low on the price and a higher low on the oscillator, and my moving averages cross up down here. So price moves up, pretty quick move up. So just thinking back about this, these are the waves in the price movement, and there's the PPO warning me that it has an alert set up, and these are actually going off all day for me. The PPO is telling me about the euro right now. So as I was saying, price moves in waves, but when we get situations like this where there's a bit of chaos, we need another way of looking at it, another way of quantifying it. Here's a trade that never really triggered. I had the divergence, but the oscillator did not cross up. So that's no trade. Although right here it crosses up, and I have another little piece of divergence right here. This again is today on the YM, and price moves up nicely. Got a nice little trade there. So that's a futures market. What do we have else? Here's the euro. Why don't we just take a look at the euro? Let's see what just triggered on that. Here's kind of an extreme example. I probably wouldn't take this trade, and here's another example of price does move in waves, but it is just erratic, and this issue, especially with news, is erratic. I've got a slightly higher high on the euro, and I've got a lower high on the oscillator and price crossing down right there, and it drops out. This really isn't enough of a signal for me to take. There's not enough actual divergence going on. I just want to show one that's a bit, not quite borderline, I guess is what you would call it. Here's another good example of divergence in the euro. And a little bit later I have to wait a few bars for the price to cross up, but it does. And then I have a nice trade up from there. A little bit over on the right in this chart. Got the same thing. I've got divergence. Price is the oscillator is just crossing up at this time, and we have a nice move to the high side there. And then Apple, I just love trading Apple, and this indicator works very well on it. Here's a great example of just a few days ago. Price is making a lower low here. Oscillator's actually moved up a bit. We have the price moving averages crossing up. So go along here and just write it out, trail stop it. It's a beautiful trade. Here's one that really didn't work out. Here's a divergence, and it didn't go anywhere. But also look at where the moving averages are. They're crossing down here. They're telling me that something, there's some selling going on here. So that wasn't a signal. So I could page through this chart quite a bit and show you a lot of examples, but the best thing to do is just put it up on an issue and take a look at some of the settings. And I actually haven't changed the settings across any of these issues, but we've got some inputs here I want to show. So to look at those inputs on TradeStation, I just right-click on the chart, find Format Analysis Technique, look at the PPO, select Format, and there's just a few inputs we can modify here. You have the fast and the slow length having to do with oscillator, the signal length, again oscillator related, and then a PPO factor. And then you also have this alert, which is what you were hearing earlier. So 0 is off, 1 is on the alert. And you can type in a specific message about the alert. So some pretty useful way for the indicator to get your attention. And just to go into just a little bit more detail about the inputs as far as the lengths here, this is going to quantify how much the histogram is going to move compared to your price. So moving these smaller will make smaller moves, larger will make larger moves. Putting a bigger gap in the numbers will make the peaks and the valleys greater. Like I said, I've left it the same on all of these charts. I actually never change any of these settings. They've worked on every market I've looked at so far. Another part of that is the signal length. It's a look-back factor. It's a complex, indicator, but we've basically boiled it down to these three simple numbers. And then the PPO factor is kind of a unique multiplier. Basically, if you want to adjust all of those higher or lower, you can run through, 1 through. I've looked at it up to 5, but again, I've brought it right back to 1 and left it where it is. So those are the inputs. So that is pretty much it. Very useful indicator. I love it. I love the simplicity of how I can just take a quick glance down here and see what's going on with the moving averages and with the histogram. It's just a quick look at what's going on. After I've looked at other markets, I can quickly glance at it and know where I'm at. So we hope you've enjoyed learning about the PPO indicator and divergence, and that you find it useful in your trading.